All right. So this is study session part 2, Pennsylvania. So if you came to part 1, you know there was 20 questions that we go through, and these are all new questions. So we just go through a list of, there's hundreds of questions that could be on the state portion of your test, and these are just 20 of them. So no need to raise your hand. When you think you know the answer, shout it out. You don't have to be right. We're all here just studying. So you don't have to know all the answers, but shout it out. I'll give you the correct answer, and then we'll talk about the answer a little bit and put it into real context, okay? So we do the national part as well. In 2 weeks, we will have the national study group part 2. So that'll be an additional 20 questions that are different from the first time we did them to help you get ready to take your exam. All right, so let's jump right into it. Question number 1, what is the primary purpose of the Real Estate Commission in Pennsylvania? Who knows the answer to this one? What is the primary purpose of the Real Estate Commission in Pennsylvania? Who do they protect? Any guesses? All right, we'll move on. You guys are being shy. They protect the public from fraudulent practices, and they ensure ethical standards. So think P for public protection. The commission is like the referee of fairness. Okay, so who do they protect? They protect the public. P for public protection. Next up, how many members are on the Pennsylvania Real Estate Commission?
Is it 15?
It is 11.
11.
11 members. So remember, it's like a football team. 11 players on the field, 11 members in the commission. I would never remember that because I don't follow football, just, but it's an easy way to remember it, I guess. So 11 members. Next question. How often must a Pennsylvania real estate salesperson renew their license?
Every 2 years.
You got it. Every 2 years biannually by May 31st of the even numbered year. So this is 2025. So this is not a renewal year, but 2026 by May 31st, we would have to renew. So every 2 years by May 31st. So a tip is even years ends in license cheers. So even years ends in license cheers. Always renew by May 31st on even numbered years. And just a side note, please don't wait till the last minute because the licensing board gets slammed with people doing it last minute. So try to get that in ahead of May 31st. Please don't procrastinate on that. Okay, question number 4. What's the difference between a salesperson and a broker in Pennsylvania? What's the difference between a salesperson and a broker in Pennsylvania?
The salesperson is licensed under the broker. To hold
Yes,
the license.
You got it. A broker can operate independently and supervise other licensees, while a salesperson must work under a licensed broker. So your tip is B, broker equals boss. A salesperson works for the broker. Okay. How many hours of education are required before taking the salesperson license exam in Pennsylvania? You guys should all know this one.
75.
You guys got it. 75 hours. So 30 hours for real estate fundamentals, 45 hours for real estate practice. So 30 plus 45 equals 75 to thrive. So just remember that. It may be a question on your test. You wouldn't think that it would be a question on your test because you literally just did it, but maybe a question on your test, 75 hours, 30 for fundamentals, 45 for real estate practice. All right, question number 6. What is the difference between a lien and an easement? What is the difference between a lien and an easement? Okay. A lien is a financial claim against the property, like taxes or a mortgage, while an easement is the legal right to use another person's land for a specific purpose, like utility access. So a lien is a financial claim against the property. So think mortgage. Mortgage is a lien, while the easement is a legal right to use the land, let's say for a driveway or water lines or access to a lake or to the beach. So the mortgage leans against the property, leans against it, where your easement provides access. What is the legal doctrine that gives the government the power to take private property for public use?
Is it,
Oh, go ahead.
is eminent domain?
Eminent domain. Yep, you got it right. So eminent domain is a government I can't even talk. They take the land for schools, roads, highways, utility lines, could be anything. Just a side note with eminent domain, it doesn't mean that the government can just come in and strip you of your land. So the government has to come in, evaluate the property, and provide you market compensation for that property if they take it. A lot of people will say, was there any way I can stop eminent domain? You can appeal it. However, it is a government power. So if they want it and they can prove that it's for the public and that they need to have it that way, then they can come in and take your land. Question number 8. What does the term encumbrance refer to in real estate? Tricky one. What does the term encumbrance refer to in real estate?
Is it to have a lien placed up against the property for payment of debt?
So a claim, lien, or charge on the property that may affect its value or use. Yes, an encumbrance is an obstacle, like a speed bump. So any claim, lien, or charge on the property is considered an encumbrance. So that could be a mortgage, it could be tax liens, it could be they can lien a property for alimony or unpaid child support. We see liens if you inherit a property and you don't pay inheritance tax. We see utility liens, so municipal water liens and sewage liens. We also see liens for adult probation or parole. So if you don't pay your fines to the magistrate, or if you don't pay any restitution that a judge ordered you to pay, they can lien your property. So we see those from time to time too. So those are all called encumbrances. So we talk about a lien being a monetary amount against the property, like a mortgage or a note, a line of credit. But if we're just using this general broad term for anything that could affect the value of the property, that would be some type of encumbrance, including mortgages and liens. What type of ownership includes the right of survivorship? These ones are always tricky because there's so many. There's so many ways to take ownership of a property. What type of ownership includes right of survivorship? And I can almost guarantee you this is going to be on your test in some form or another.
Joint tenancy?
Joint tenancy it is. So tip J is for joint, J is for jumping to survivor. So ownership jumps to the other tenant automatically. Okay, joint tenancy has the right of survivorship. What is the main purpose of title insurance? And whether this is on your test or not, you'll use this every day. It's one of the few questions that you're literally going to use every day. What is the main purpose of title insurance?
Just to protect the title, like protect not the policy. It would be like the policy that the owner holds.
Well, the policy does something. So what does the policy ensure?
Anything being wrong with the title.
But what is a title?
It shows ownership of.
No, it
No.
doesn't. So a lot of people get this tripped up with like thinking of like title in real estate, like a car title, and they're not the same. So your deed shows ownership in real estate, but your title, hold on, let's start back in here. So your title policy, unlike your deed, is basically just a history or a research on the property to ensure that nobody else can come back and take it from you. So it is the chain of events that happened. So this is when the property became part of record. It went to this person. They owned it. They put debt on it. And when they closed it, they settled the debt. And that debtor can't come back against the next owner. So this person sold it to this person. So think of title like a chain. It goes, each link on the chain is an owner in past history. Okay. And think of liens and encumbrances on this big metal chain as rust. So if they go through each link of the chain and they find rust on the chain, this says that there's a potential cloud on title. So we call it a cloud. And it'll say, okay, well, we have to remove the rust from each one of these links and make each link shiny again so that the rust doesn't spread up the chain to the link that we represent, which is the person buying the property now. And they do that, and then they give an insurance policy called a title binder that says, we've made sure to remove all the rust. We've checked all the links in the chain. Nothing happened to our knowledge that was illegal. All debt was settled, and you're buying the property free and clear of any past wrongdoing or any past debt on the property. And we're so confident in our searches that if something happens and somebody comes back, if we missed one of those pieces of rust on a link, we're going to pay the debt so that you don't have to. So that's kind of the purpose of title insurance. And that's how title insurance works. So it protects the buyer and the lender against financial loss from defects in the title, such as unknown liens, encroachments, or ownership disputes. So title insurance equals trouble shield. It protects against past problems you didn't cause, but you could still be responsible for in the future. So just remember that the action of title is searching the history, and the actual title policy is just insurance to ensure that they did their job and that any debt or any claim to the property would be settled by the insurance company if that happens in the future. But actual title, there is no title to it. Like there's no physical title, like, you know, at the DMV for property. That would be your deed. Question number 11. In Pennsylvania, how long must brokers retain transaction records?
I think it's 5 years.
It is 3 years. It is 3 years. So 3 strikes and you're out. Brokers must keep those files for 3 years or risk penalty. I believe when I got my license years ago, it was 7 years, and then they reduced it to 3. For those of you who also cross over into Ohio, the answer is the same. It is also 3 years in Ohio as well. So 3 years, we have to keep all documents. You should also keep your copy of your documents for 3 years as well for every transaction that you do. Your broker is also required to keep a copy of those, but you as agents, although rare, could be audited by the state as well. So keep those documents for 3 years. Question 12, what must a licensee provide at the first substantial contact with a consumer? So when you talk to a consumer for the first time about real estate, what are you required to provide them with?
The consumer notice.
You got it. The consumer notice. First contact equals first notice. Before talking details, hand over the form. So common question we get is if you hand over a consumer notice and the client won't sign it, what do? Well, you as the agent would go ahead and place their name, their first name and their last name on the back of the form, and where it says signature, put refused to sign and put the date, and then you sign it. Okay. At that point, the conversation then would be ended because you cannot advise them of their rights and you cannot properly represent them. Question 13, what is commingling in real estate practice? Likely to be a question on your test, regardless of which version you get. What is commingling? So if you don't know the answer to this one, this is one you'd want to write down and put a star beside.
This is when the escrow money and the broker commingling the money in the same bank account.
Yep, that'd be a good example. So illegally mixing clients' funds with personal or business funds. Yes. So a violation of that, like Star said, would be, let's say a broker has a sizable escrow account, but unfortunately their operating account is getting low and they need to pay their electric bill. So if they would take money out of the escrow account to pay the electric bill, that broker could lose their license because that's considered commingling. They're using money that is not theirs. Also, you have to, in Pennsylvania, you have to keep your escrow, your commission, and your operating accounts separate. So we have escrow accounts that are non-interest bearing, that just hold money that's not ours. Those are dollar accounts. So the account opens for $1 and only client money goes in there that hasn't been reconciled with a closing. So it's the only thing that's allowed to be in there, and it cannot be interest bearing. And then we have our commissions accounts, which are again an escrow account. So all the commission money goes in there. It's divvied up to where it needs to go. And any of the broker's commission then goes to their operating account where they pay their bills. So that's kind of how that works. But escrow always has to remain separate. It is a very high auditable account. And broker escrow accounts, we give state access so they can walk into the bank anytime and check the balance and check our accounting report on it. So they have to be balanced daily. Question number 14. What is the maximum amount that can be paid out per claim from the Pennsylvania Real Estate Recovery Fund? What is the maximum amount that can be paid out per claim from the Pennsylvania Real Estate Recovery Fund?
Is it $100,000?
I think it's 300,000.
It's 20,000 per claim and 100,000 per licensee. So yes, Sarah, it's 100,000 total, but only 20,000 per claim. So tip is the 20 over 100 rule. Think $20,000 cap per deal, 100,000 lifetime max for any one agent mess up. So the Real Estate Recovery Fund protects consumers in the event that the agent had any wrongdoing and was required to pay restitution for that client. If the agent cannot pay the restitution to the client, then the Real Estate Recovery Fund would come in and they would pay $20,000 per claim up to $100,000 max. Unfortunately, if you have to use the Real Estate Recovery Fund at any point, it does result in a loss of your license. So please avoid at all cost, because if somebody does turn you in and is found to have a claim for the Real Estate Recovery Fund, your license would be pulled. So it's a one strike kind of deal. Question 15. What is a special agent in real estate? What is a special? This one's a hard one. And sometimes this becomes a question on testing, but sometimes it's not.
Isn't it if you like you're representing the principal?
I mean, principal has a lot of different meanings. You can have a principal client, you can have a principal broker, you can have a principal team lead. So it just depends. A special agent just means that they have limited authority. Like you are in this instance, like listing a home. I'm hiring this agent specifically to list this home. I don't want them to help me buy a home. I don't want them to work as a dual agent. Their job is specifically and specially just to list the home and only to list the home. And I do not want them working in any other capacity. So it's very specific terms in which you're working with a client. Now, when we work with a client, we usually, a lot of times, like work with them in many different aspects. So if we have a seller who's selling a home and then maybe they're buying a bigger home, We work with them to sell their home, and then we also work with them to help them find a home or to buy a home. But that's not always the case. Sometimes they use different agents for different things. A special agent is just an agent that's doing something very specifically and not taking care of all of their real estate needs. So, question number 16. What does the Fair Housing Act of 1968 prohibit?
Is just any discrimination against sex, race, color, religion, and family. Like they can't discriminate against like who you live with. I can't remember how it's described. It's family something.
So the fair housing is discrimination in a sale, rental, or financing of a house based on race, color, religion, sex, or national origin. So later amendments added disability and familiar status. However, age is not covered on fair housing. Age is not covered on fair housing. So fair housing equals fair chances. Everyone gets an equal opportunity to buy or rent, no exceptions. And just so you know, on a national level, fair housing can differ on a state level. So the state can't take away from fair housing. So they can't come in and say, oh, well, we don't believe that sex should be, a discriminatory item. So we're only going to base ours on these items. So they can't take away from it, but they can add to it. So that's one thing that is important to know is they could add to it, and they could say age. They could say, they could take it a step further and say, familiar status or pregnant individuals, which a lot of times are covered under familiar status if that information is provided. They could say people with dogs. We can't discriminate against people who have dogs. So they can add to it, but they can't take away from it. But these are protected by law. These are all questions that you want to make sure when you are talking to your clients that you stay away from. You never want to ask them their race, color, religion, sex, national origin, disability, or familiar status unless they volunteer that to you. Those are just kind of trigger items that you just want to separate yourself from as much as possible. And our job is just to treat everybody with the same level of respect that we would want to have if we were hiring an agent, regardless of who they are. What is a CMA, which is also called a comparative market analysis?
When you're doing, when you're comparing the values of homes around a home to know like what is a good amount to market the house at?
Exactly. Absolutely. A property value estimate based on recent comparable sales. So if you're having trouble remembering what CMA is, comparative market analysis, use this instead. Compare my area. So you think comparing homes nearby. Side note, a CMA is never to be considered an appraisal and should never be used for anything that an appraisal should be used for. When somebody asks you if they should get an appraisal, you should always recommend that they do. The CMA is to find out the marketable value of the property, what you could potentially market it for, not what its value actually is. Now, we talk all the time that there are multitude of different values to a home. So the first is what the real estate agent thinks the home is, because we're comparing other values, and that becomes our list price. So we have our list value. We have our sales value, which is what the buyer feels that the home is worth based on their offer in a competitive market. We have the appraisal value, which is what the lender believes that the home is worth. We have the assessed value, which is what the taxing authority says the home is worth. And then you have your insurable value or your replacement value, which is what your insurance company feels that the home is worth. So you've got 5 values right there, and they can all be tremendously different. Okay, so we're looking at marketable value. If we're going to put the home on the market and people aren't going to look at this house and be like, are you crazy? Why are you asking so much? We do a comparative market analysis to show what the neighbors' trends have done, what their homes are listed for, sold for, and then we make our own best judgment to say, hey, I'm not an appraiser. I don't know what the actual value of the home is that a lender would lend on it, but I can tell you what your neighbors' homes are selling for. And if we go to market and ask this, we're not going to be the laughing stock of your neighborhood because it's right in line with what your neighbors are doing. So it's kind of a monkey see, monkey do type of thing. And you'll use CMAs all the time, all the time. Question 18. What is the bundle of rights in real estate?
The right of possession,
Hmm?
the right of quiet enjoyment, and some other stuff.
It's okay. You're getting it. You're getting it. The bundle of rights includes legal rights of property ownership, which are possession, control, enjoyment, exclusion, and disposal. So think DEEPC. DEEPC. Dispose, enjoy, exclude, possess, control. Think of this as everything an owner can legally do with their property. So you can possess it, means most of you are probably sitting in your homes. You might be sitting in your cars, but who knows? But you can possess it, meaning you can be inside it. You can control it. You can decide whether you're going to paint the outside of your house or put in new landscaping. You get to enjoy it. You get to sit out on your back deck if it was, not raining like it is now, and enjoy your property. You can exclude it. You can stop doing things with it anytime you want. You can dispose of it, which means you can sell it or give it away if you want to do that. So these are all the rights of property ownership that nobody can take away from you because they are considered the bundle of rights. And it says when you buy a property, this is what you're allowed to do as long as it's not breaking any other laws. So you can't have, a moonshine shop in your garage because that would be illegal, a little crazy, and could potentially harm your neighbors. So those are some things. As long as you're not breaking the law, they can't tell you what you can do with your property. The government can't come and say, well, you can't put petunias on your front porch planter pot because you have the right to do so. Question number 19. What is the purpose of an escrow account?
For the broker to hold funds,
What type of funds?
down payments, and money that they cannot touch.
Well, it's not a down payment. Down payment would be the money that they have to put down on the property before they can get their financing. So what's a step before that? What do we put down when we make an offer? This is to hold deposits. So to hold funds safely until the terms of a deal is met. Escrow is a safety box, keeps everybody's money safe and neutral. So we use an escrow fund when we have an accepted offer and you have to put down a deposit. So the buyer will normally put down a deposit called an earnest money deposit to start that contract. That could be any amount of money. I mean, it could be $1, which is not usual, but it could be very commonly we see 500, 1,000. Sometimes we see 10,000, just depending on the value of the home and the terms of the agreement. That money gets written to the broker account or title company usually holds escrow. Attorneys hold escrow. So there's certain places that they can put it depending on the contract terms. They put that money as a deposit as good faith to say, yes, I'm going to fulfill my end of the bargain. And if I don't, then you seller get to keep my money. Now, in Pennsylvania, we have a gazillion names for earnest money deposits that go into the escrow account. I don't know why we have so many names for them, but you'll get used to hearing them all. So a lot of times you'll hear escrow funds because it's going into the escrow account, and that's really not the name for it. You'll hear hand money. We say that a lot here in Pittsburgh, hand money. You go outside of Pittsburgh, nobody knows what you're talking about. What the heck is hand money? Hand money is the deposit. Deposit monies, even though that's kind of a slang term, that's not the formal name for it. And earnest money deposit. So earnest money deposit is the term for the money collected to start the contract that goes into escrow, earnest money deposit. But like I said, it could be called other things. So once you get into the business, you'll start hearing those. But for your test, earnest money deposit is the term that you're going to need. Last question. In Pennsylvania, when must a listing agreement be in writing? In Pennsylvania, when must a listing agreement be in writing? Before marketing the property or accepting any offer. So no paper, no posting. Always get it in writing before you advertise. Understand that our listing contracts is what gives us the ability to represent the client. If you don't have a listing document signed with all the proper disclosures, you have not been retained by that client. We see a lot of agents every day putting things online like, hey, I have this pocket listing. There is no such thing. You can get into a lot of trouble for that. So you can't have pocket listings without paper. You can't, your neighbor can't come over and be like, oh, why don't you do some advertisement online, get my house sold. And you say, well, here's the listing agreement. You say, yeah, we don't need contracts between friends. You do. You cannot market a property or accept any offers on a property without a listing agreement. So no paper, no posting. Always get it in writing before you advertise. All right, guys. How do you think you guys did?
Pretty good.
Good. Hopefully I was able to help you kind of remember things and put all of those things together. I know I ad-lib a lot, so you can always tell me to shut up if I'm talking too much. That's always okay.
I love those things. Those help me so much to remember.
Well, that's good. Well, I hope you guys all have an amazing rest of your day. Please stay dry out there. We will be back in 2 weeks for another study session. Some of you have a test before then. So maybe I'll see you in 2 weeks. Maybe I won't. We'll see. But good luck to those of you on the call who are going to sit for your board exams. I am wishing you the best of luck. Also, never get discouraged if you don't pass it on the first time. Up to 50% of agents do not pass it on the first time. Just do the best that you can. And taking the test is an experience. Once you do it once, it's much easier to pass it on the second round. So, but I have faith in all of you because you keep coming to our study sessions, and I think you guys are going to be well prepared. So I will stay on the call in case anybody needs to chat with me privately afterwards. But if you don't, have an amazing rest of your day. Thanks, guys.
Thank you, Christina.
Yes, thank you.